Hello guys, welcome to the Trading Parrot. As you can see here on the RSI daily, step by step, we went for the highest likely scenario, which was to test the resistance on the trend line on the daily RSI, higher low, to perform the breakout, test it again, new support, and then to shoot to our target. So far, we have done the big progress. We are almost at 47. Our target, according to the videos I've been sharing with you for the past 4 days, it's located from 49 to 51 RSI daily. In today's video, I'm going to give you an update, not just what's changing from the point of view of this swing trade setup, which is just a daily setup, but we just closed the month of June and a weekly candle. So I need to keep you updated on how things are progressing in this bull market. What's the likelihood that we're going to now resume the uptrend? And what are the key levels that can get things quite bitter if it plays out? So stay tuned. Guys, if this is the type of content that you like to watch, make sure that you're subscribed to the channel. Hit the notification bell so you get notified every time that I put out one of these videos. And if you feel like supporting the channel, watch the video until the very end and do not go anywhere without leaving a comment down below. That's really helping the channel to continue growing. So thanks so much for that. And by the way, guys, there's a link in the description to our new partner, Bybit, which is a great exchange, and now we can offer you rewards of up to $30,000 if you use the link in the description and you join my Discord server. Head down to the section Bybit Perks and connect your Bybit account. If you are using my referral link, when you do that, you can get 70% discount on Observer or VIP, the Trading Parrot memberships. We left instructions on how to transfer your KYC to your new Bybit account so you can still get the perks no matter what. And once you get those perks, you're going to have access to those discounts and to a large library of Pine scripts that are available to each of the tiers. You can access the signals, orchestration signals, pair selection, which allows you to select the most profitable pairs when you're using platforms like 3, Week Hunter, Ganium, or Altrady. Okay, enough of that, and let's go with the charts. First, let's close the month. We just finished June with a minus 10% down. Typically, right after seeing a close in red in June, you see green in July. Let's have a look at 2013, minus 29, followed by almost 10%, minus 14, followed by 21, minus 3, followed by 24, minus 6, 20, minus 39, even in the middle of the bear market in 2022, followed by almost 21% up. So now we are in a humble minus 9%, and we could speculate that we can get somewhere between a 10 and a 20% up, just judging by this perspective. And here's our candle of the monthly. It got a wick to the upside and so does to the downside, and we are right there starting in the green in July with a very small candle. Too early to say from looking just at this what's going to happen next, but I could say that this looks to me like a bull flag and still above this level of support located at 61.4, which is not bad, but we are still not out of the woods putting any new high. On the other side, we are at a record low of interest in Bitcoin of 16. You can see how this is dragging lower and lower, even with a dead cat bounce there, and it feels like we are touching the floor, at least from the point of view of the socials. Today's market, of course, is following Bitcoin. There's a lot of green. The big winner is ENS, Ethereum Named Service. You have some meme coins as well pumping. So let's go now to the setup, and later in the video I'm going to tell you one aspect that could completely spoil the party during this week. There's a high chance that we might get a shakeout once again. But first, let's focus on the completion of this and what's next. As I mentioned earlier, we had the breakout and we are more than halfway through towards our target of 49 to 51 RSI. Let's have a look at what's that in the price. I left it here with the reverse engineer RSI, and you can see how close we got last night to the first target. We made it to 63.8 and the target started from 64.05. More aggressively, we were targeting 64.9. So we still have some work to do, but right now we are against resistance. This line here has been support and resistance in the past. So I'm not surprised that we are starting to behave a little bit more humble in front of it. In regards to the 4-hour, you can see why I gave the video of the other day that most is going to miss this setup. And the reason was because we had a breakdown on the 4-hour. And I even published this on Twitter because that's what I do. Follow me. My handle is Trading Parrot, and you're gonna stay tuned with every single setup that I'm following. This particular breakdown was a complete fake out. I wasn't thinking that it was going to be a fake out. I just thought that for this time, I'm just gonna focus on the daily time frame breakout, and I'm gonna let go the 4-hour, even though I love trading the 4-hour, but I think it was the right decision to do because this broke down to 34, but then very quickly broke out the global resistance. And that fake out is very clear when we see the price as well. You can see that once we broke down from this trend line that has been support and resistance multiple times, we tried twice to re-enter and we failed. But the price higher low and it went for a final attempt here. You can see how stubborn the longs were at these prices. And that's purely because at this level, there were so many shorts that the price just couldn't fall from here. So what you have to think once the price goes into the green is that now there should be a lot of extra longs. And we're going to have a look later in the video to see if that's true. Because if we start getting too many longs, that's the recipe for the price to come back and start punishing them as well. Let's enjoy the moment for 5 minutes because from this manipulative situation, we've been for 4 days following us saying that we are going to do precisely this. And right now, that's what we are doing. And I think we deserve a little bit of celebration. If you've been following the channel, please leave a comment down below if you were believing in the setup. Let me know as well if you already took profits or if you are planning to take profits later on at which prices. I just think that this is awesome. I'm going to have a look at the monthly CPR. We closed the month of June. Basically, we bounced from the line of support. We never touched the first line of resistance here in the green, and all the other two levels were never touched. So it was once again a very narrow month. The new levels are right now appearing. We're on our way. We just touched the CPR pivot of July, which means that it's no longer a virgin month. The price is going to potentially find some resistance here, the CPR pivots that span from 63.5 to 65.2, and in here we might spend some time and we might get one rejection which might take us to the first line of support located at 56.8, and hopefully after we do that we can start resuming the bull market. This will coincide with our setup of taking this liquidity from the shorts. Now, don't marry the setup, meaning that if we are still and we still have strength and the ETF inflows resume and a lot of other things happen, we might continue going higher. So let's have a look at the full range of the monthly CPR for July. It spans all the way from 43, that's the worst case scenario according to the CPR, and the best scenario according to CPR is 84K, my friends. That's the range for the month. And yes, just like I said, after two delta signals that are coming from the ratio between longs and shorts, we started seeing some bouncing. The first one didn't play out, the second one did, which is amazing. You can see here how the longs are stepping in from the very lows of the ratio and now heading for a potential higher high and possibly reaching these levels here where you get too overextended in terms of longs and short. This is one of the indicators as well that is included in the membership with the VIP subscription. I use it not just for TA, but also for automation in bots. And right after seeing so many times Bitcoin underperforming in terms of the socials, we see that now we are in the lower end, which means that we are at the top of the rank once again, and that's the typical behavior after you see their performance in an asset like Bitcoin in the middle of a bull market. Let's look at the general markets because we're seeing some very interesting patterns. As I say, the DXY was looking toppy. That was on the 28th of June, and right now you can see that it's testing support here at 105, but we have a couple of days in red, which is the breakdown of this ascending wedge. Just like we say, it was high likely in a video a couple of days ago. And the Nasdaq again is looking toppy. Interesting that these two guys, DXY, the dollar, and the Nasdaq together are looking toppy because usually they do the opposite. But here we have a double top with a wick to the upside. Below we have the RSI having lost the momentum. The S&P, it's still in preparation here, printing a double top and entering slightly into our area of target for the high signal and testing support on the RSI. Looking at the daily divergences, we don't have any new ones, but we can see that those 5 divergences that settled on the 25th of June ended up playing out, pushing the price slightly higher. And the hash ribbons, the good news is that from this very wide open mouth that we have on the 28th of June, where the miners were suffering massively, there was some big capitulation there, very similar to what happened during FTX. Right now, we are starting to close slightly more the mouth, which is a good indication because what we need to do is to completely close the mouth and get a bullish cross and then a green bubble and then the final buy signal. This capitulation is taking quite long, but let's hope that is going to complete. Now, in terms of our setup, the thing that I'm worried is number one, the short-term holder price is located at 63.5 and the price today is slightly below that, which means that is our current resistance. And that is the definition of a bearish trend, if not a bear market. We do not want to be below the short-term holder realized price. It is support during bull markets and is resistance during bear markets. So we have to flip it very quickly. We are allowed to be below it, but for very short periods of time. If we do it for an extended period of time, say goodbye to the bull market. So that is concern number one. And concern number two, which I'm going to give you right now, is this CME gap that we formed during the weekend. We are at 63.9. In here, massive CME gap that spans all the way to 60.3. Pretty much all CME gaps get filled. Very rarely we leave some behind. I think it's quite likely that we're going to fill this one here. We don't know for how long we are going to continue going higher, and that's the key. We might go to 65 before filling this. We might go to 71 before filling this. Impossible to tell. So this is not as straightforward as open a short and wait until you reach this, because you might enter into a massive drawdown or potentially you might never manage to fill it. Very low likely, but possible. And we close the weekly above the lower bull market support band, but below the top one. This is a weekly chart, and we have done things like this, but I would have preferred to go all the way above 65K, because that will have allowed us to be extremely more bullish. This is a bullish candle, so let's not throw it to the bin. Let's still celebrate, and this week is in the green with a candle in progress. The fear and greed index printed a double bottom going to the 30s, and right now we are back above 53. This formation here looks to me quite bullish, like a reversal signal. And the ETFs have had 3 days in a row of inflows, which is also bullish. Last video, the signal was on the 8-hour, on the daily. That signal appeared in the chart, but during the day, as the price started going higher, it disappeared. So let's focus on the 8-hour. We have 2 signals on the VIX SPY. This is a free indicator on TradingView. Got featured a while ago. Having these 2 buy signals is quite promising. We can have some drawdown, but you can see many times we don't even have that drawdown and we start shooting up. Weekly, Very important, we close the weekly below the support, and this is another indication that we should be concerned while we are below it, and hopefully we reclaim the support very quickly because we are slightly below it. It's not that far below. And that's what we are doing now, but we are testing this as a resistance. What we don't want is that this resistance sends us back. So let's go into the price and let's see where is located our current resistance. And I remind you that the target, if we don't manage to break above this resistance, is the level of 36 in the RSI. In the price, the 36 target is today located at 47.7, and our resistance is not that far beyond. In fact, we already almost tested. It's located at 63.8, and hopefully we're gonna break above that 63.8 and completely ignore the fact that we have ever been below the weekly support on the RSI, which is a very ugly place to be. Hopefully, this stochastic RSI is going to come to the rescue and print a bullish signal. And then, voila, we have the full narrative for a reversal. I mentioned in Twitter that there is some mild distribution going on at these levels, but not as big as you can see compared to the one we have at 73, 72. This is some mild distribution because we are slightly above the 1 ratio between deposits and withdrawals from large wealths. Our target is still located at 64.9. There's still that liquidity there. That is the first target of liquidity, followed by 69.2. But since we have the CME gap located somewhere here, I'm half divided now on whether in the next few days we're gonna first close the gap and then take 65 versus going straight for 65 and then taking the CME gap. In terms of the fair value gaps, this is the picture that we were seeing a few days ago. You can see how the price eventually goes and takes the larger chunks. We have left here some fuel to continue going higher, but it's not a lot left, and that's why I'm looking into this chunk here and the CME gap for a potential take of those levels. And a couple of days ago, we noticed this wall of buying, and that is precisely what started taking the price higher. I published this on Twitter. Make sure that you're following me. My handle is Trading Parrot. And as I say earlier in the video, the longs are starting to step in here, a little bit dangerous for the price to start coming back down, together with the open interest putting some high. That is the recipe now for punishing the longs a little bit. Support is being built at 59.8. Hopefully, we're gonna get some sort of triple top, close the gap, and then continue going higher, but nothing is guaranteed. I take things one step at a time. I hope you do as well. All coins continue to reduce the blue levels here and going into the white, which means that those drawdowns are starting to get smaller. And we have a surprise here. The signal of the longs versus shorts has crossed below 70. This, guys, is massive. Every time that we close below 70 from the highs, if you focus on all this green, you have this smaller move from 62, that one there, and that one here. And today we can put one line right here, and we will have to see how high this is gonna take us. But the full recipe is there. We have a cross below 70, and we are well into the fear. And dominance is bouncing from this support. We continue going sideways in the dominance, but the momentum has been lost. So I'm slightly biased towards the dominance coming lower and giving some good entries for all coins. But we will have to see, because this dominance is always tricky in every bull market. It ends up going slightly higher, tricking everybody, and we don't want to be one of those that gets in the wrong side of the trade. And last but not least, good news, because we have a second warning buy from Cerberus. I won't be able to cover so much in detail this indicator in this video. I have done it 100 times in previous videos, but if you are subscribed to the channel and you watch regularly my videos, you know what a warning buy means. If not, leave me a question down below and I answer more in detail. Thanks so much for watching. I'll see you in the next one. Take care. Bye bye.